On Friday, we had a very bullish stat for stocks, and guess what? It got busted, and we look at silver making new all-time highs. Is this the way of the stock market flashing a major warning sign that a financial crisis could be right around the corner? And make sure you guys stay tuned to the end, because I'm going to share with you guys something stocks have only done 10 times over the last 75 years. So the big news that seems to be circulating around is everybody's very impressed at the massive move that silver has. If you look at the ETF for silver, SLV, it was actually up 9.05% on Friday. Now, you might look at the chart and say, Mike, it's going straight up. That has to be good. Then we come over and look at the fear and greed index, and you can see we're back over into greedy territory. So what could possibly go wrong? We look at the most recent investor sentiment survey this week. The bullish sentiment dropped down from 44.1 down to 37.4. But look at the neutral category. It jumped up from 22.7 to 27.8. And the bears also jumped up to 34.8. Now, this might not look like a problem just yet, but I'm really scratching my head saying, watch out. Are we bracing ourselves for a major financial crisis? We see this article right here. Gold surges as central banks brace for a global debt storm. And this is something that even the rating agencies have talked about with the US. One thing that can cause a potential downgrade is all the debt that we have. And when politicians want to come out and say, don't worry about it, inflation's under control, along with the Fed, we'll look at silver rocketing to the moon. We come over and look at gold also rocketing to the moon. Gold on Friday was up 1.11%. And we can see gold closed at 45.52.7. This is the highest closing price gold has ever been at. Now, we come over and look at some of the other charts real quick. Let's try to get a grasp on what we can expect out here this week, as it's going to be a shortened trading week. We start off looking at the Dow Jones chart on the top. We look at the transportation index, which will be this chart down here on the bottom. Now, recently we have broken out from this declining trend line, and look at the transportation index just screaming on the way up. And even if we look at the Dow Jones up here, it really is not that far away from all-time highs. But when we come over and we look at this chart, this could be a 10-year yield versus the 2-year yield spread. And notice we are starting to steepen once again. And if you guys remember back earlier in the year, right during this time period right now, when the markets were crashing down and Trump warned everybody, if you want to get rich, now is the time. Well, look at what the yields were doing then. We were also seeing yields starting to spike up. Now, if we come over real quick and we take a look at the dollar index, this is going to be important, especially as we focus on some of the metals out here today. But the dollar index on the daily chart, we've been mapping out this double top pattern. Top number one, top number two, we have the pattern completing down here at 97.33. Now, we haven't quite hit that, but what's kind of ironic out here is, as we talked about gold rocketing up on Friday, silver rocketing up, why was the dollar able to catch a little bit of a bid? Are we starting to see a little bit of a fleet into safety? And will we see some of the metals start crashing down? On Friday, traders were saying, Mike, look at platinum. Platinum on Friday was up 9.95%. Now, if you guys don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. If we look at platinum out here, look at the monthly candle. This is absolutely insane. To me, this is showing signs of exhaustion. Now, does that mean we're going to simply turn around tomorrow or even the beginning of next year? Not necessarily. And this is not a particular pattern that I want to go ahead and go out there and short. We come back over and we look at one other chart real quick. This will be the SPY versus HYG, which is going to be high yield bonds. And notice the SPY chart right up in here. On Friday, we closed kind of with a doji-ish looking candle, but then look at the peaks out here on the HYG. Here's a high, lower high, and now we're turning down again, forming another lower high. Now, the reason why this is important is this can also be used kind of as a risk on, risk off type of scenario in the market. If people are chasing high yield bonds, well, guess what? They're feeling a little bit more risk on, which could actually push asset prices up a bit. Now, Thursday night, I shared with you guys this, what should have been a bullish stat for Friday, the day after Christmas. Notice going back from 1953 to 2025, look right here at December 26th. The S&P 500 has an average return of 0.54%. That is one of the most bullish days out of the entire year. But when we come over and look at how the indices actually performed on Friday, all four of the major indices were down. The Dow was down 20 points. The NASDAQ was down 20 points. S&P 500 was down 2 points. The Russell 2000 was down 1.29. Now, it may not seem like a very lopsided market when you look at advancing issues versus declining, because we only had 53% of issues declining on the day. Now, we come over and start looking at some of the sectors across the board. It's really no surprise with silver and gold rocketing to the moon that basic materials was the best performing sector out there. Now, if we look at the 1 week performance, basic materials was also the best performing sector out there as well. And then technology was the second out there. Even look down here at the 1 month performance. Basic materials up 10.75%. And something that is a healthy sign for the market was the fact that financials also participated on the month, being up roughly 6.31%, at least at this time. Now, the month is almost over with, and so is the year. Now, if we come over real quick and we take a look at the SPY, I want you guys to focus on this. We've now had 1, 2, 3, 4, 5, 6, 7. We are working on the 8th consecutive month up in a row. Now, this is something that has only happened 10 times over the last 75 years in the market. So this is definitely an anomaly out there. I think the largest streak has been something like 10 months or so when I was looking back in time. And even though this is a red candle out here from the prior month, which could be part of it, which could be a hanging man candle, but in order for that to be a true hanging man pattern, we got to get down below the low of that month. And we just simply are not there. We're basically still hovering in the upper third and even higher than the upper third of the range from the prior month. MACD indicator on the monthly chart still looks strong at this moment. Now, speaking of something else looking strong, Apex Trader Funding right now, 90% off all accounts. So all accounts, only $19.60. Special pricing for the activation fee. Take advantage of this offer. Use the link in the description box down below. Use promo code Mike at checkout. So now if we come over and look at the SPY on the weekly chart, what do we have going on over here? Well, you can see we closed in the upper third of the range and we just kind of been wedging on the way up. This candle right here basically tested out that swing point there, whoop, right back up. Now, when we look down here at the MACD indicator, it does signal that there could be trouble brewing up ahead. Notice as this week we came up, made a new all-time high. Did the MACD indicator make a new all-time high? I think it's very clear and obvious that everybody can see it most certainly did not make a new all-time high. And if we do start pulling back here a bit, I would want to focus on this high volume node at about 664.06. Now, when we come over and start looking at the daily chart, this is where we had a pattern validate this week. We have an ABC pattern. Here would be the A to B leg. The B to C leg would be the corrective move. And that actually gives us a price completion all the way up here at 709.65. Now, when we come over and look at the gamma exposure levels real quick, let's just see where some of the key levels are coming into play. You can see we have call resistance sitting right up there at 700, which is kind of going to correlate with that 7,000 strike price that so many traders have been talking about for quite some time. But notice if we start to fail, we do have high gamma exposure right here, right around 695. But a critical level I do want to pay attention to, if for some reason the SPY starts trading below 689, that's where I think the door could open up and we could see the market test some lower levels like 680 and potentially all the way down to 670. So if we look on the daily chart, if we do start to get a fail, what would that look like? Well, 680 would be right here, right near that gap that we had up out here on the 22nd. It'd be right there filling the gap. Now, if we do break below that, 670 would be all the way down here below this swing low right over here. Now, when we look at the MACD indicator, notice, even though we're pushing up to a new all-time high, if we zoom this out, notice the trend in the MACD indicator. Look at the peaks. Are they going higher? Absolutely not. Does that mean the market has to turn around? No, but it is a warning sign that we at least want to be able to pay attention to. Now, if we do start to pull back, I wouldn't mind to see a small little pullback and then set up another ABC pattern within this larger ABC pattern for a potential move up higher. We come over and start looking at the 4-hour chart. MACD indicator does have a bullish cross, but notice you can see some of these glaring gaps that still have not come back and been filled yet. If we were to pull a Fibonacci retracement from the swing low right up here to the swing high, notice that 50% level is just above where we could potentially fill the gap. Right between the 50 and 61.8 level would be enough to come down there and fill the gap. And we look on the composite profile, we also have a high volume node sitting right around that same area. And that's also very close to that 680 strike price that we talked about when looking at the gamma levels. Now, when we come over and look at the 30-minute volume profiles, we zoom this out, you see we had a massive gap up on the 18th, did not come back and fill. We had a gap up on the 22nd. We did not come back and fill. And then look at where the point of control was on Friday. If you look at this profile shape, kind of a lowercase b, and the point of control closed near the lower end of the range. Now, the spike up that we saw early on was enough to push the SPY to a new all-time high. But as I'm looking at this, one thing we want to be cautious of, even though the markets seem elevated at this moment, is pay attention to the MACD indicator. If we sit there and consolidate up here around these levels, the MACD indicator gets near the zero line, that could be setting up nothing more than a recharge point for another leg higher to go ahead and complete the ABC targets to the upside. Now, we come over and look at the futures markets. This is going to be 2 weeks back to back, which is going to be very suspect. We are likely going to have at least a minimum pullback this week. And what I mean by this is, notice where the prior week, where value area high was, well, we closed above it. And anytime we close above value, the rule behind that is we expect the market to come back and revisit that level within the next 1 to 2 sessions. Well, since each one of these blue profiles represents 1 week in time, then a session would be defined on this chart as 1 week. So this past week, we never came back to test value area high. So that means highly probable that this week, now, if we do not come back this week and test value area high, quite often it's going to be several weeks before we come back and visit that area. Then look what we have this week. This week, we also closed well above value area high once again. Now, it's very uncommon to get back-to-back weeks where we close outside of value and we don't at minimum come back and test that level. Now, I do want to zoom this up here just a bit, and I want to draw your attention to some key volume profile levels. We have a huge minus development area right here within the profile, and then really anywhere from 69.56 all the way down here to about 69.36. I'm going to go ahead and include this as one large minus development area. Also notice we are going to have 2 consecutive untested point of controls. We have the one from the prior week, and now we have the one from this last week, where when the market opens, quite probable we will see this as still being an untested point of control. What makes this an untested point of control is price has not come back and tested it within the next session or beyond. So now one of my MOs come Sunday night is I'm going to look for a quick target into this minus development area, aka value area high on the weekly 69.67. Beyond that point, we could then look to pick off some of these other high volume nodes as potential targets, 69.59, then anywhere within this minus development area. But I want to warn you guys something about minus development areas. The first time we come into it, quite often the market will do one of 2 things. It'll either reject right back out, or the market will sit there and consolidate within that area. So as we're coming down, if it's a fast move down towards that area, you don't want to have your blinders on and say, oh, this is it, the market has topped, we're going to continue to go down. Be on the lookout for potential clues that the market's going to try to bounce, or at minimum go into some type of consolidation pattern. Now, when we come over and we start looking at the daily profiles, notice on Friday, we're actually could be setting up a potential A to B equals C to D pattern on the way down. So we'll see if the market can make it down there. Now, I'm not sure if I'm going to make the open this Sunday. That might be one of the times that I actually miss it. If you guys made it this long in the video, the first person to guess where I'll be on Sunday will win a free Take Profit Trader account. Just leave it in the comment section down below. But notice right here, we have this potential for an A to B, B to C if this high holds, and that gives us a price completion at 69.56. Now let's talk about the invalidation point of this pattern. One, if we go above the swing point right there, that would invalidate the price pattern. So we get above 69.81.5, that will invalidate that pattern. The validation point would be if we get below this area right here, which is basically the low on Friday at 69.69. Now, something we talk about on the live streams, and I even bring it up in some of these analysis videos as well. Since the validation point isn't truly till here, now one of the things we can do is pull a fib from the swing low right up here to the high. Now, if the market starts breaking below 786, we can then look for a quick target back down to Friday's low, and then look to play that ABC pattern all the way down. Now, in the event that we start breaking above value area high, which will be 69.83.5, then I really want to look for the market to come back and kind of retarget the Asia session highs. And the reason why I say that is this is a huge wick on top of this candle. And I'm just looking for a quicker point to take profit. And then the additional target would be right up near the highs on Friday. Anything above and beyond that, we got to really think that the market's going to try to push and hit that 7,000 number. But we also got to think about this two-sided. Could so many traders be looking for that 7,000 price point that the market actually does not make it up there and actually turns back down? Let me know your thoughts in the comment section down below. Will the S&P futures markets hit 7,000 before the end of the year? Now, before we take a look at the NASDAQ, let's jump over and take a look at SLV, and then we'll take a look at gold here in just a moment. SLV, massive rocket ship on the way up, like we already talked about. Now, with the gap up, can we look at the options markets to kind of get an idea of where price may be headed? Well, if we come over and we look at the gamma exposure levels, we look right here, we look at the next expiration. Right up here, we have a ton of gamma exposure at 75. So could this be where the market's heading? Now, a little bit of good news out there. If you are short the market, we do have some significant gamma exposure levels a little bit lower as well. Look right down here at this strike price on the bottom right-hand graph. You can see we have quite a bit of gamma exposure right around that 60 strike price. Now, if we look at where 60 is right here. Now, we do want to go ahead and pull a fib right down here from this breakout low all the way up to the current high. Now, if we do go higher come Monday, we'll have to adjust this on up. But right now, that 60 level is just below the 38% retracement. Remember what we always talk about, a 38% retracement is just a minor retracement and what could still be, in this case, a bullish move on the way up. Also, let's not forget, China's curbs start here in roughly 4 to 5 days. So we could see some more explosive moves on silver in the coming days. Now let's go look at GLD real quick. GLD was up a little more than 1% on Friday, kind of closing with a doji candle. Now we come over and look at the gamma exposure levels real quick for GLD. Notice we have quite a bit of gamma exposure right around the current price in which we're at. We're kind of roughly just above that high gamma exposure level. So really, if we see the GLD coming back below 415, that could open the door. We come down, we fill the gap from Friday, and maybe even start working on this secondary gap right here. And I really like that secondary gap because notice here was a prior all-time high right over here to the left. We have broken away from it. So now it makes logical sense the market would come back, try to test that area as a structure breakout point, retest, basically repairing the structure point. I don't think that's too much to ask. Now, in the meantime, we could see gold go a little bit higher before that actually takes shape. Now, if we look out here on the economic calendar for next week, Monday, no major news. On Tuesday, we're going to get the FOMC meeting minutes. Then on Wednesday, we get the weekly unemployment claims. Thursday, the markets close. Friday, no major economic news. Now we come over and look at the NASDAQ. You can see we had that hangman candle last month, and now this month we are working on our way right back up. Now the NASDAQ, unlike the S&P 500, is not on the consecutive month streak. That red candle did close lower than the prior month's close, unlike the S&P. The S&P had a red candle right here as well, but that red candle still closed above the prior month. Now look at the MACD indicator. It still looks strong at this moment, not really showing any signs of weakening just yet. But notice the volume profile is very thin along this structure. And looking at the monthly chart, a logical place once a retracement gets underway to watch out for would be right around 539.54. We also have a minus development area within the composite profile, but it's also a structure breakout point that should come back and get tested. Let's come over and look at the weekly chart real quick. Weekly chart, we kind of have this triangle pattern. MACD indicator, slight cross to the downside. Now, when we break out of this, as we're getting closer and closer towards the edge, a breakout is imminent. Now, it's going to be a breakout to the upside or to the downside. Well, only time will tell. We want to trade the charts, not what we think. At this moment, we still have a high, lower high, potentially slightly lower high. We'll have to wait and see how this week plays out. Now, on the daily chart, we still have the case where this is a high, lower high, and the jury's still out. Now, we are above the 786 of this retracement that we just recently had. We're above that, which really increases the probabilities the NASDAQ will come back and try to do 100% retracement. So at minimum, come back and try to retest these highs. On the daily chart, we do have a bullish cross of the MACD indicator, but notice as we're near this swing point up here, the MACD indicator, at least at this moment, is at substantially lower prices. If we do start to roll over, one of the areas I would want to focus on would be right in this minus development area, about 614.07. In the event that we break the swing point right up here, our next target would be the ABC pattern completion all the way up here at about 648.91. Now, when we look on the 4-hour chart, MACD indicator is crossed to the upside. You can see we're really trying to break out of that triangle. We're just not there just yet. On the 30-minute chart, MACD indicator crossed to the downside, and it has been. Notice as the NASDAQ continues to march on up, notice the MACD indicator, it peaked out all the way over here. The MACD indicator actually peaked out in this run up back on the 22nd, and price did continue to go higher. Something to watch out for. If we just simply consolidate at these levels, MACD indicator gets near the zero line, watch out. That could be nothing more than a recharge point for another leg higher in this market. Now, when we zoom this up and we look at the volume profile, notice how low on the range the point of control is. It's not very much higher than it was from the prior day. Now, if we start breaking below that last 30-minute candle we saw on Friday, watch out. We're probably going to have some downside testing. And we'll see if indeed we can start to get some type of pullback to come in and fill some of these gaps. We have at least 1, 2, 3 gaps that still need to come back and be filled. Now, when we come over and look at the NASDAQ futures markets, what do we have? Well, one, we do have a point of control up here. We still have not tested on the weekly chart. Now, just like the S&P 500, this is going to be back-to-back weeks where we closed above value area high. Here was the prior week. We closed above it. We never came back and tested it. This week, we are closing above value area high. So we'll see, do we see a little bit of weakness this week? Now, we do have some minus development areas that could come into play I would want to watch, but I'm going to be heavily focused 25,815.75 to see, can we come back and test that level? Notice if we do start rotating through this area, we're going to have 2 consecutive untested point of controls, one from the week before, and then the most recent one, 25,695.75. And just below that level, we have a minus development area within the profile. So I wouldn't mind seeing the market pull back here just a bit. Now, let's just go ahead and pull a Fibonacci retracement from the swing low to the swing high. Notice where the 38% level comes in. It actually comes in just below this high volume node. So maybe this week, maybe it's the minutes, maybe it happens not until next year, but wherever the market turns, the first area I do want to watch for a major pullback would be right around the 38% retracement. And then we'll see, does the market firm up at that area or not? In the meantime, we'll see if we can get some other shallower retracements and take off some of these volume profile targets. Now we come over, look at the daily profiles on the 30-minute chart, kind of a D as in dog shaped profile out here on Friday. A lot of chopping back and forth, back and forth. Now we just barely closed right at or just below value area low, 25,858.75. So here's going to be the key. Sunday night, are we trading below that? If so, one of the areas I want to focus on the NASDAQ is right below us, 25,770.50. This is an untested point of control. I believe this has a very high probability of being tested in the very near future. Now we came close on Thursday. Now we came close on the 24th to testing that out. We didn't quite make it down there. And then on Friday, we also did not make it down there. So if we do start getting below value or low, I want to target this area. But in the event we start trading above value or low, that's when I want to watch the point of control, 25,876.75. That would be target number 1. Target number 2 would be value area high, 25,892.25. Anything above and beyond that, I either want to target the Asia session low from that night or all the way back up towards the highs that we saw on Friday. Now, if you guys are thinking about trading with Lucid and you want to know how to set up Lucid with Tradeovate and NinjaTrader, then you want to make sure to watch this next video right here.